Bank reconciliation statement is basically made in two steps. The first step is making an adjusted cash book. An adjusted cash book is basically made out of all the differences between cash book and the bank statement. Now, the additional items in the bank statement are incorporated inside the adjusted cash book, which basically means that all the items that have been missed by the business inside their cash book are inserted in the cash book, and that is how we achieve something, a new version of cash book that is called adjusted cash book. Now, the items that are usually present in the adjusted cash book, they include bank charges paid by the bank. The business only comes to know about the bank charges at the end of the month when the bank statement is received. So, that finding, which is done at the end of the month through the bank statement, is then recorded on the credit side of the cash book, because bank charges are certainly going to reduce the cash balance or the bank balance present in the bank account. So as a result of that finding, bank balance is going to decrease, or the cash book balance is going to reduce. Then another item which may be recorded inside the adjusted cash book is what you call as direct debit. Direct debit is a payment made from the bank account on the instructions of business or the customer. So again, it is going to appear on the credit side of the adjusted cash book. Another item which may be recorded on the credit side of the cash book of the adjusted cash book, that is a standing order. A standing order is basically an instruction from the business to the bank to deduct a certain amount of money on monthly or on regular basis. There are some items which are to be recorded on the debit side of the adjusted cash book as well. If some interest has been received by the business without information being directly sent to the business, and the business only discovers that amount at the end of month through the bank statement. So that money which has been received in the form of interest or dividend in the bank account is then recorded in the adjusted cash book on the debit side. Then comes another concept, or another item which is recorded on the debit side of cash book or adjusted cash book, that is again discovered through the bank statement. That is something which is called a direct transfer by the customer into the bank account. Sometimes customers are directly going to make payments through the bank account through the pay-in slip without intimating the business that they have deposited the money. So the business is only going to discover that through its bank statement. So that item or that money which has been received during the month without knowledge of business is recorded in the adjusted cash book at the end of month through the adjusted cash book. Then there is another thing which is called bank gyro credit, which is recorded on the debit side of the adjusted cash book. That item is basically money received by a business for giving out a consultancy or some other services that have been rendered by the business to other businesses. That money is received by them through bank gyro credit. So that money is again recorded on the debit side of adjusted cash book. And then the cash book, we add up the debit side of the cash book, and then we take away the credit side items. So debit side minus credit side, you are going to get a balance, and that balance is going to be debit balance, because the debit side is bigger than the credit side. Or if it's the other way around, that is if credit side is exceeding the debit side, then that adjusted cash book balance is going to be a credit balance. The next step is going to be, making the bank reconciliation statement. We'll discuss that in the next lecture. Thank you very much.